Welcome back to the BitCorn podcast. So Kevin Kimle, am here with Cael Sampson. Cael, good to be with you.
Good to be here always.
We're going to dive into some BitCorn nerddom today.
Yeah.
So just you and I, we've talked about this before, but we're going to do a deeper dive. We're going to talk about the power law and how that intersects with commodity markets that in agriculture we care about. And that's grain, even corn. So before we started recording, Cael, you were talking about being in Professor Dermot Hayes's commodity class.
Yeah.
Non-agriculture guy in a finance class, graduate level finance class with an agricultural economist. And he kept talking about corn.
That's right.
Talk about your reaction to that.
Okay, so coming from a pure finance background, I'd always heard some of the top level people in commodity trading say, well, energy is the most interesting thing to trade. It's highly volatile. It's all over the place. You can make a lot of money if you're right. And I'm like, all right, I want to get into something interesting here. And Dermot's going on about corn every day. And I'm like, man, this thing is not moving intraday. This is horribly boring for uh, a very high time frame, 1 hour, 5 minute chart trader to look at. But then you get into basis and stuff, maybe it's a little bit better. But yeah, it seemed incredibly boring until I have a really good reason to pay a lot closer attention.
And it ends up you start looking at corn through a lens of Bitcoin. And yeah, it starts to get a whole lot more interesting.
Yeah.
So maybe just to take a little bit of a step back for our audience, what is the power law? And so there's financial instruments, commodities, whatever has a price can follow different mathematical properties. And most financial instruments follow a type of mathematics that's called exponential. So it solves to a regression, in particular mathematical solving function to an exponential, but Bitcoin, it ends up, solved something called the power law. Let me take a step even further back from the mathematics. So behind me on my shelf here at the top is a book called How Nature Works by a Danish scientist called Bach that came out in the 1990s. I didn't read it until much later, but it talks about essentially how things in nature follow the power law. And so the growth of plants and animals growing very fast when they're young and then slowing down as they get older. And of course, the plants and animals dying at some point. But anyway, that doesn't happen with everything. The distribution of earthquake sizes. The measurement of human networks, which is a natural thing as well. So city size distribution, that there's a few really large ones and a whole bunch of really small ones. That's how nature works. And the concept from the book gets at the core of that nature through something called self-organized criticality. And so what that means is that nature organizes itself right on the border of chaos and order. And this is getting it really deep, like wisdom of, think of the book of Genesis, of God bringing order to chaos, or in Eastern kind of thought, the yin and the yang,
Yes.
literally the picture of the border of chaos and order. Anyway, this goes deep.
It's one of the
human
most
history.
fundamental mathematical laws in all of human history.
And so I think it's a beautiful thing because it's like nature exists at that perfect border between chaos and order, right? The chaos part is hard to handle, but you introduce new things to make the system stronger, but you have to have enough order that it doesn't fly apart. And I think we as human beings kind of understand that as well. And I think about entrepreneurship, a course that I've taught now for 16 years, as that same thing. If you're doing it the right way, It's on the border of chaos into the new. And we live it at BitCorn, don't we, Cael?
Yeah, we do. I was thinking about myself, and I feel like there's a lot of periods in my life, and especially with Bitcoin, where I'm pushing really hard, and then I have to soften a little bit to bring myself back, and I push really hard, and I have to soften a little bit so I don't freak out.
Into the chaos, back into the order.
That's right.
We all have to balance that according to how our personalities are wired. And so it ends up that there's some really smart people. Giovanni, let me make sure I get his name correct, so I will pull up his book.
I
To give
find it
credit where
incredibly interesting too that we talk about the border of chaos and order because Parano, and we're going to get deeper into this, but in his oscillation theory, he has a mathematical proof for the border of chaos and order.
that is interesting.
Oh,
So Giovanni Santosta, an Italian physicist, is one of Stephen Parano's partners now. They work together all the time, but they're two of the pioneers of this kind of idea of the power law and sort of what does it mean practically for, and I'll pull up a screen here, Cael. So I'm pulling up a screen from our treasury node. And so we build nodes for our customers, but we have one for BitCorn as well. And so we're currently trading today. We're recording this on Sunday, July 12th. Bitcoin is trading at 64,164. But if I go down to charts, the first one I come to is Bitcoin and power law trend. And so the orange line shows the Bitcoin price going back to 2015, which is all over the place, but then it shows in the green the power law trend price. And so if we look at today or near today, this is actually pulling it up for July 12th. So trading around 60,465, at least for the data point that I have on our chart. Power law trend price is 145,744. So we're at the lower end of that. And oh, no, our price is 63,766. So our
probably at the
below
open.
the trend price, yeah, one standard deviation below is 60,465. So we're trading right at the bottom of that.
That would be the bottom of the chasm of chaos.
Yeah.
And well, like I said, we're gonna get more into this, but I think it's so interesting. If you keep a look on that green line, that is the attractor of order. And so it's
So it
always
comes
gonna
back
come
to
back.
that.
Yeah.
Sometimes goes over. It's actually spent more time over it than below it. But we're touching on kind of that bottom band that you see is as low so far as we've gotten. Doesn't mean it can't go lower, but we are definitely in the lower part of it, which is why, Cael, you and I believe we're at a really good time.
And if you start looking into Parano's stuff, it's extremely interesting the fact that he says, well, this chaos dissipates over time. So there's less room for it to go way, way, way higher and way, way, way lower. So if you keep that in mind, and this is why I say in our newsletters, if anyone here has been following along with the Bitcoin fives, it is absolutely the greatest generational buy territory that we currently sit at that I've seen since 2015 Bitcoin.
Yeah. And so if we zoom out, and so we've got this 2042 button, and so this essentially projects that power law trend price forward. And so you see a little bit of that, what you're talking about, Cael, that compression over the course of time. Now, this is a log chart, so log prices on the left. But we went out to 2042 because I started saving for our first grandchild who turns 18 in 2042, Hattie Marie. So this is kind of Hattie's law. But we go out to May of 2042 and the power law trend price is $6 million per Bitcoin. Now, perhaps like we are now, we're at one standard deviation below that. That's $2.5 million per Bitcoin. perhaps we're one standard deviation above, then it's $9 million per Bitcoin. And if we get to 2 standard deviations above, which we do sometimes, we're sitting at $21 million per Bitcoin. And so again, not a prediction, but a guide on where it's going. And where does that come from? It comes from Bitcoin, and this is going to be strange, but being the most natural money we've ever had.
Yes.
It's a digital commodity, but it behaves like nature, which is why it follows power law mathematics. Why is it natural? Well, because it's a human network, and that network grows over the course of time. We're only 17 years into it, a little bit more than that, but it grows over the course of time.
I think an interesting point to that is one of the things you wrote about in your recent article. And how long was it, Kevin, if you can remember, that it took gold to acres to compress versus now Bitcoin to acres value?
Yeah, it's like 90 years compared to 9.
Yeah. And the what, 70% versus 99.7%?
Yeah. And so part of my intention here is that, we track something called the corn Bitcoin price. So let me pull up another law or another chart. So if you're receiving our BitCorn 5, this is just a chart that shows Bitcoin price for the last year and a half approximately. So how many bushels of corn does it take to buy 1 Bitcoin? And so we're at low levels compared to where we were when Bitcoin hit a high
It's as
last
low as it
October.
gets.
Yeah, we're at 14,305 bushels per Bitcoin. But the 200-day moving average of that, the 50-day moving average, the 100-day moving average are all creating what I think is a bottoming formation sort of a thing here, which is just really interesting. And so I think Bitcoin is the first globally free market, truly free market in anything. Trades 24/7. If you're an owner, when price goes down, you don't like that, just like any other thing. But the price is what the price is. Governments may mess with it at some point. They're not too much now. But it's run by nodes, run by miners, held by individuals, many of which are doing some form of self-custody. Many aren't as well, but that's fine. But it's a free market. But when you start to look at corn prices through the lens of Bitcoin, which is what we're trying to get at with the corn Bitcoin price, I think it makes you a better trader in corn. Or if you want to think from a farmer perspective, a better marketer. Like, when is the best point to sell? There will be certain times, as part of our theory in tracking this, when it's better to sell corn in dollars. And there'll be better times when it's better to sell corn in Bitcoin or turn dollars into Bitcoin, whatever. Same sort of idea. And we happen right now, Cael, to be sitting at one of those times.
Definitely.
And so I also had looked at in one of my recent articles, I'll pull up another chart on this. And so Steve Parano had done some work on gold Bitcoin price, which I found very interesting. And so if Bitcoin follows the power law, the question he asks is, does the gold Bitcoin price follow the power law? It does. Well, then I, the corn guy, asked, does the corn Bitcoin price follow the power law? It does. With much the same mathematics as gold, actually, just a little bit different, but gold is a commodity, but a monetary economy, so that didn't surprise me completely. But then in my most recent analysis, we ran it on the chart that I'm showing here in the table. And this was just on monthly data, so the data isn't quite as precise, but it's still held on. We looked at corn, soybeans, wheat, crude oil, copper, and gold, and they all held. So this chart that I'm showing essentially shows that all 5 exponents are trading in the same range, around 5. So time to the 5 power. predicts what they're going to hold. And so part of what you might conclude is that holding commodities instead of Bitcoin is a really bad idea.
Yeah.
But we can't, from an agricultural perspective, we can't eat Bitcoin. Now we will be able to buy food with it. We will be able to buy commodities or whatever. But anyway, we still have to produce commodities is the point. We still need oil. We still need corn. We still need soybeans. We still need wheat. We still need all the things that we need. But what the power law suggests is that we can become a whole lot better traders in these commodities,
I think you can
understanding some of these dynamics.
I think you can use these dynamics to your advantage to enhance and boost your operations. And we're working on numerous products that should help immensely. I hope they help out immensely, and I'm sure they will.
So, Gail, I just find it interesting that you come into agriculture from a non-agricultural perspective, so you bring a fresh and young set of eyes. And you look at something like corn, and so you're a guy that's traded crypto.
Right.
There's Bitcoin. Every week you're trading options on strategy.
Yeah.
You do a lot of things.
Yeah.
And you're an active trader, and you've explained to me before, like, trading corn, not very interesting.
Yeah.
And I think even those of us from agriculture can kind of understand, like, the volatility is not there. It's kind of this physical thing. It can move, but not move that much. And so no risk, no reward. But again, I think beginning to think about a corn Bitcoin price instead of just a corn price, does that bring another level of dimensionality that makes it a little bit more interesting for you?
Yeah, it does. So we spoke about this a bit earlier, but when you first showed me your rendition of the corn Bitcoin price, I looked at it, and being a guy who likes to challenge himself at very near-term time frames with the most challenging trades like MSTR options and crypto, I thought, well, I'm not seeing anything extremely interesting here because I can't trade anything on a daily basis or on a weekly basis. But that's really because if you take out my young hubris and you zoom out a little bit, it's just the trade is so obvious that Bitcoin is absolutely obliterating everything, including corn. So you want to be on the side of Bitcoin, and it makes an extremely interesting trade for long-term generational thinking because you're putting yourself back onto the side of opportunity and stability. And we talk about the volatility, and oftentimes when we go into our farmer meetings, they say, well, I just don't want that volatility, which I get. But what I really love about Parano, I told you I was pumped for this podcast, and I'm excited because we're figuring out ways in real time to, I call it weaponize that volatility so that instead of taking away from your stability, adding on more risk without, the benefit, but we can time that correctly, and grain traders understand timing. We, we can use these fundamental mathematical laws to be able to boost operations, which is extremely interesting. And then on the long-term time frame, you're looking at, well, and overall you want to stay on the Bitcoin side, so you can't lose as long as you're responsible and stay on the side of Bitcoin.
Yeah, so I'll get out on our speculative new product bubble or prospective new products. So one of the new products that we're looking at least piloting this next winter, we call the BitCorn offer. And offers are nothing new in agriculture, but the idea is you would take new crop 2027 corn, let's say, and put an offer above the market for that, which is like selling a call on the Chicago Board of Trade. And so this is called different things in the industry, sometimes a premium offer or whatever the case may be. And so it could be, for example, you offer to sell somewhere above the market. So let's say at $5 or $5.25 new crop futures for your 2027 crop. You could sell a call and the farmer could receive back 25 cents a bushel. Those things are happening today, and oftentimes in today's poor commodity market, that's being used as just working capital, which is understandable. Again, things are bad, and like every quarter and per bushel we can get in working capital is helpful. But let's do an alternative. What if you turn that 25 cents a bushel of offer premium into Bitcoin today, and then carry that forward into October of 2027? Again, looking back at that power law trend price, well, if you keep that in Bitcoin between now and then when you actually harvest the crop, even if we only are at the same level that we're at today, one standard deviation below, we're sitting at about $95,000 Bitcoin by then. And so you turn that 24 cents into like 50 cents or something like that. Or, well, not quite. Anyway, let's say 35 cents per bushel.
And if you're lucky, it could go higher. That's being extremely conservative.
Yeah, if we go to the power law trend price, we're like at 225,000 or something like that.
Yeah, that's over a 4x.
Yeah, so all of a sudden we're at like $1 to $1.25 a bushel that we've turned that quarter per bushel into. If we go one standard deviation above the power law trend price by October 2027, we're sitting at something like $325,000 to $340,000 per Bitcoin. Then all of a sudden you've turned that quarter per bushel into $1.75 to $2 per bushel extra.
Think that's going to expand any margins?
So you're selling, yeah. So then you're selling $7 corn,
yeah.
right? I mean, just to put it in corn terms, and then, yeah, for our younger trader-oriented people looking for more exciting opportunities than usual corn, Cael, we started to create some true trading margins.
Pretty exciting. Like, it's pretty exciting.
And so, yeah, I mean, the challenge is, if you're farming, if you're producing oil, whatever, you're operating in a world of dollars and you're paying your bills in dollars and you need to get paid in dollars to pay your bills. Like, I get that. But where can you create these niche opportunities to let time be your friend? Because right now, as a commodity producer in anything, I don't care if you're a farmer or anything, but by and large, time is not your friend. When we look at USDA indices that they use today, they're currently on a 2011 index. And so the average grain farmer is getting paid 70% of what that 2011 index is for what they grow, for what they produce. And they're paying 150% for their inputs. Doesn't take a whole lot of mathematics to tell you that things are tough in agricultural commodities right now.
And they're probably not getting better anytime soon unless something like this comes into fruition across the industry.
So, Cael, you've spent some time looking at not just that power law trend prices, but Parano and others. But he in particular has done some really fascinating look at the residuals, at looking at, okay, we're below or above what that power law trend is. Is that random, or is it something that follows a pattern? So tell us what you've learned.
Yeah, it's absolutely fascinating. It is a pattern. And so first, I want to state, do physics models belong at a grain desk? I think they do. And I told Kevin going into this podcast, I like to think about Jim Simons, who started Renaissance, the hedge fund. It has been the best performing hedge fund in modern history. And it's because they're famous for not hiring finance analysts, but hiring physicists to do the mathematical modeling for finance. And so I absolutely think that physics-based models belong in finance and belong at the grain desks, because why shouldn't agriculture be the beneficiaries of these kind of new financial tools. And so he studied physics at MIT and Harvard. And interestingly enough, the way he got into modeling Bitcoin in this way is because he was measuring the ways in which galaxies grow and cluster using these models. And it's the very same power laws, right? Power law follows nature. And so that's how he got into this.
So I didn't know that. So the growth of the universe essentially follows a power law?
Yeah. Yes. And that goes down to then the oscillation part of the cycle is what makes galaxies cluster, which is
So interesting.
incredible. And then I want to share,
So, not to get too dramatic,
yeah,
power law is God's law.
that's
It
right.
really is.
So going into this podcast, I wanted to look up one of his interviews, and he starts out talking about Sir Isaac Newton and the relationship between Bitcoin and alchemy. You know, you get into physics and you have these brilliant minds. Uh, we've talked about this quite a bit. Towards the end of their careers, a lot of people regard them as crazy because they start getting into things like alchemy, which, to be fair, back in the day, alchemy was basically the same as chemistry. As chemistry was developing as a science, uh, there was the same thing was regarded, alchemy and chemistry. They were pretty much the same thing as it was making that transition. So Sir Isaac Newton in the 1600s discovered calculus, discovered gravity as the apple fell onto him from the tree. But then he goes on,
Worked out the mathematics of gravity
that's
and
right,
planetary motion.
the mathematics. And then he goes on to become the master of the mint. He goes from physics once again into currency, which is extremely interesting. And then at the same time, or leading into that, he was working on alchemy. And so I find it extremely
He
interesting.
is the father of the gold standard.
There you go. And so I just want to go through this chart of what Parano believes Bitcoin solves in alchemy. So first we have prima materia or prima materia, and that's the raw chaotic substance of the world. We get to chaos again, and that's energy, or for Bitcoin's instance, it's using electricity. And for our farm view, that would be the sun, where the corn is taking in photosynthesis energy from the sun.
Yeah, our core of what we do in agriculture is turning the sun's power into calories
Right.
at the end
Every
of the day.
farmer is
That's what,
secretly a master alchemist.
true.
And then we have the alchemist crucible. That would be Bitcoin's ASIC miners that are mining Bitcoin. They're providing the hash rate for the transactions to go through the network. I don't know did you think about something that's good for the farmer version of that? I think that might just be corn, or that might just be the crop.
Yeah, I mean, I think of mining as sort of the proof of work, and proof of work in agriculture is the crop that you produce, right? The corn that's stored in the bin, the beef that's on the hoof and eventually in the freezer and on the meat counter. I mean, that is proof of work.
Yeah.
And that's what end consumers pay for.
And then we have the long heralded concept of a philosopher's stone that no one has been able to find. And it could turn out that that is the Nakamoto consensus, the code that Bitcoin works off.
Yeah, and again, this gets into a bit of the obscure mathematics and that Satoshi Nakamoto solved, but the Byzantine problem gets solved through the consensus. And so, what we're setting our customers at BitCorn up with is a node to where they can buy Bitcoin, self-custody Bitcoin, do transactions, but they're also one of about 25,000 public-facing Bitcoin nodes. And so they essentially reach consensus. And so it's a way for a community to agree on what the rules are going to be when not everybody agrees.
Without a government, without a central bank. And our goal is to get 10,000 farmers with a node in their hands. So if you think about roughly a third of the Bitcoin network, being validated and voted on by American farmers, well, that becomes a really interesting concept.
And agriculture being looked at with some envy by others, saying, what do they have figured out that we need to figure out?
That's
Instead
right.
of the opposite. Like, instead of other people saying, well, agriculture's boring and it's subsidized and whatever.
Sorry,
It's like,
guys. And then the transmutation to gold is, of course, Bitcoin itself. And then the quest for immortality or eternal value would be Bitcoin's scarce $21 million hard cap and an incorruptible ledger, which we liken that to the finite amount of farmland out there.
great metaphor, Bitcoin as farmland.
I appreciate that so much. I just love when people do things like this. All right, let's get out of here. So I was talking to Gemini with this. Forgive me, but it's a pretty brutal concept to go through. But you asked about the random walk. And the interesting thing, and I'll go up to these points. This is translating physics to the grain desk, and I really like this table that it created for me. So there's kind of four layers to this principle, and it's the clustering principle. It is the nature of the behavior that Bitcoin is taking on. It is not a random walk away from the power law like people think it is. No, there are log period oscillations, is how Parano describes it. And so this is compressing cycles, the thing that I was talking about before, where, and we've talked about this before, Kevin, where we did the earthquake analogy. You have a big earthquake at first, and then the aftershocks get smaller and smaller. And that's why I got into crypto in the first place. I describe it as a primitive market. The volatility is my opportunity. Now that might work for a trader, but it might not work as well for people who are operating a business and want to take advantage. So I hear that. And the good news is if anyone is worried about volatility, it's going to lessen over time. This is the log period oscillations that Parano describes within the power law. And until we get to that point, we're going to do our very best to take advantage of that volatility for you. Now, the other concept is a reconstructed attractor, and this is where he took out the trend and he went to the residual returns, right? And I really love the analogy of structured breathing that it gave me here. The deviations from the trend are not random noise. Listen to your question. Bitcoin doesn't just grow, it breathes in and out in a recognizable geometric pattern. And the geometric pattern is called an attractor. It's a concept in physics. And if I share my screen over here, you can see what an attractor looks like. And when he shows later in one of the slides, it looks something like this. Within this three-dimensional space, there is this movement where you can geometrically pattern it and you can kind of figure out where it's going to go. I find that extremely interesting, and that is the attractor that brings it back to the power law when it goes over, and it brings it back when it goes under. It cannot be broken, and it lessens over time. So all those articles that go out when Bitcoin is in a bear market about Bitcoin being dead, hey, they're great clickbait, but physics disproves it.
And I love the way you talk about breathing maybe as a metaphor. So if we each think about how we breathe, in, out, in, out, it can follow different patterns. If I'm on a run, it's one pattern. If I'm sitting at my desk, it's another. If I'm surprised or something scares me or whatever, right? Then it's sudden spike. But either way, it's oscillations, in, out, in, out. And so essentially his work shows that it follows these oscillations that, giving you probably bad flashbacks to your trigonometry from high school, they follow a sine wave.
Yeah.
And so the interesting thing is that while the power law at a raw level, the line that I showed earlier, the trend price, is not exactly a prediction. It does make it, from a high level, predictable. And the oscillations being a pattern makes it, even at a deeper level, more predictable, doesn't it? Is that the right way to think about it?
I think so. Yeah.
And I think the other thing, Cael, that you're getting at from a physics perspective, and it's one of the basic questions certainly that I had in first about Bitcoin, is, yeah, but what if? What if Bitcoin dies? What if Bitcoin goes to zero? And there was a time in its early days where that certainly was a distinct possibility. If nobody would have used it, it would have died. But that didn't happen.
Yeah.
As Satoshi wrote, it might catch on. You might want to have some. Ends up, yeah, that is certainly the case. You might want to have some. And we've went from 126,000 to a few weeks ago, 58,000.
Yeah.
We've had a 50% drawdown. But that's less of a drawdown than we had in past cycles.
Yeah, it is.
Will we have drawdowns again? Absolutely. Will they be 50%? Maybe.
And I know,
But as we get further and further out, it's going to be less.
and I know the cycles very well. You know, you go back to 2021 collapse, you know, like 68% drawdown. You go back to 2017, 80% drawdown. You go back to 2013, 90% drawdown. It's just creeping up this whole way to be better and better and better. And so the next time, yeah, we might have a 45% drawdown. We might have a 40% drawdown. But the math holds that volatility is lessening.
And to contrast that, other financial instruments, stocks, bonds, follow exponential math, which an exponential can be straight up. But Giovanni, or I think Stephen Parano, one of them, might have been in the physics of Bitcoin, so Giovanni, he equates financial instruments that follow exponential to bacteria that you have growing in a closed chamber. It grows at an increasing rate until it runs out of fuel, and then it dies. It goes to zero.
I don't think it's very hard to go out there and find someone that doesn't think that the current financial system is unsustainable and will eventually die.
Yeah, and pick your asset. Well, the number of stocks, gosh, I should have pulled up the statistics and I'm not going to remember, but the number of stocks in like the S&P 500 that trade today that existed even 25 years ago is like not very many. Now there are some. Microsoft,
Cisco.
part of the Magnificent Seven. So do I think that Microsoft will go to zero? No. Not anytime soon. Do I think that Microsoft will go to zero before Bitcoin? Yeah. Maybe a long time.
Yeah, if I had to put my money on either Elon Musk or Microsoft, my money's going on Elon Musk. You know, they're all directly competing, and it's not a fair fight with Bitcoin. And people are all going crazy, right, about the SpaceX IPO, and Elon Musk is the world's first public trillionaire. Well, guess what? Bitcoin is already over that. Bitcoin already hit 2 trillion. So if you believe in Elon Musk, and a lot of people with their heads screwed on straight do, guess what? Bitcoin's better.
And his companies hold some Bitcoin, right?
His companies hold some Bitcoin, and they would like to hold even more. Yeah.
And that's an issue related to the power law that sometimes comes up as well. It's like, well, if Bitcoin were that special, wouldn't all the billionaires have it? Well, the issue is Bitcoin isn't big enough to hold their assets yet.
Right.
But that's essentially what the work that I did on commodities and Bitcoin is that essentially Bitcoin assumes the value of commodities over the course of time, but not just commodities. It takes up the value of U.S. treasuries,
Real estate,
real
land.
estate, all of it, all the place where people put their fiat in order to try to preserve their value. Eventually, at least part of that gets invested into the hardest currency that's easiest to store and cheapest to store, and that is Bitcoin.
That's right. So the last parts of this, dissipative dynamics, we've sort of already gone over. That's very similar to the log periodic oscillations. But I want to get to the Z-score because I think that is the operation they have to take to work these models. And so I made sort of a primitive form to what Parano is getting at in my Sage model, which multiple of our farmers that are on so far are using today. And that gets at Z-scores. And that's what I'm going to call the Bitcoin basis. So just like the local cash basis tells you if the corn market is favorable, we can use the Z-score to tell you if the corn to Bitcoin exchange rate is stretched, or in general, if Bitcoin versus dollars is in a favorable or unfavorable position. And so that is what I base my Sage model off of. We call it buying Bitcoin better. When Bitcoin, there's a good chance that it's bottoming in its bear market, you're gonna buy way more on like a weekly frequency than you normally would. And then when it goes way up, you're gonna buy way less or maybe not even at all. So you're gonna end up with outsized performance. And then we get to the intersection, the arbitrage opportunity between Bitcoin and agriculture. Now, I think everyone should be utilizing that to create their own Bitcoin treasury. Where it's applicable, agribusinesses, co-ops, if they don't have a lot of very positive NPV projects, they should be taking advantage of Bitcoin treasury if they're sitting on a lot of cash in their balance sheet. But on top of that, how can you bake this in to financial products that farmers are using, that agribusinesses are using? There's a lot of ways, and we're not going to go too deep into it because I don't want to give out the secret sauce. But we've been working on financial products. Kevin, you went over your offer program. I've been working on something, and the math is absolutely beautiful, and it kills.
Yeah, if you put an asset as a treasury behind your business, whether it's a farm or an agricultural business or whatever the case may be, and something that will grow through that power law over the course of time, it just creates an optionality for what you do that's unbelievable. And yeah, today, so I can show a screen of your Sage model, so I'm back on my dashboard of a node. But if I click on auto buy, so we're currently showing a gauge here for those of you who are listening. So this is a gauge scale of the Sage model. So tell us a little bit more about this. We are currently sitting at a minus 0.53, which is labeled as a fair value, and that's a fair value for buying Bitcoin.
Yeah,
So how
honestly,
did you design this Sage model for buying Bitcoin?
so I aggregated about 11 on-chain inputs that are all evaluate different kinds of valuation metrics and different kinds of network value metrics between the miners and profit and loss, the MVRZ, and those all aggregate together to a main Z-score, like I was describing earlier. So if this Z-score is fair value territory, which is, about it's -1 to 1, you're going to buy a normal DCA, so $100 a week perhaps. But if we really tank, the extreme buy is going to kick in and you're going to 3x the amount. So if you were buying it 100 weeks before at fair value, now you're going to buy with $300 per week. And if we're at 300,000 Bitcoin right now, well, that would be either elevated or overvalued, maybe even an extreme sell, which just really means don't buy right now. It doesn't mean sell your Bitcoin. And so you might be purchasing $25 a week at that point instead of $100 a week. Honestly, I would like this to be lower than fair value based on my gut instinct, but that's why we have systems, and perhaps we'll tighten it up a little bit more with this new stuff from Parano, where we take into account the dissipation effects.
Yeah, I was going to say my gut probably be into that undervalued and probably 2x buying, but
Yeah, me
yeah,
too.
the reason you do this sort of thing is to bring a discipline.
That's right. Yeah.
And so what happens when we turn this on to the corn Bitcoin price? Well, same idea. If you grow corn, you're going to have to sell it at some point. But again, there might be better times to turn that corn either directly or indirectly, the dollars that you generate with your corn, into Bitcoin, and there might be worse times.
Well, do you want to pull up anything from your most recent Substack article? Because I do think that thinking about the generational financing of land and agriculture for families is good to think about, being that we're slating Bitcoin as the antithesis to what's happened after the US government got off the gold standard and how that changed the financial freedom and the ability for farmers to get more land, for young farmers to come in and be able to buy their way in.
Yeah, so I called this article that I released on Friday, Generational Wealth, Acres and Satoshis. And so I've got a picture of me standing 1 year ago in a town called Kornwestheim in southern Germany. And so I am relatively sure that my great-grandfather that immigrated to the United States, Gottlieb Kimle, was born in Kornwestheim. Corn with a K, but still it means the same thing, essentially grain. And so it turns out, like in the 1400s, when this was just a village, it was renamed from Westheim to Kornwestheim because of the productive soils that were there. So this is a picture that I'm showing on the screen of Gottlieb and his wife Lena on their 15th anniversary in 1908. So they both immigrated from Germany. So came with relatively nothing. So Gottlieb came over with his two brothers, and so his father sent him over. If family lore is anything close to correct, why did he send his sons to the United States? Well, he sent them over because he said he didn't want to lose his sons to fighting in wars.
Yeah, how did he know?
Yeah. Yeah, I mean, the Franco-Prussian War would have been 1870. But anyway, it's a history rabbit hole, but Otto von Bismarck was starting to militarize and consolidate Germany. Anyway, Christian Kimle, spelled Kammle, so they did change the name, was prophetic from that perspective. And so they came over. I don't have the picture in this article, but my uncle and his wife have this picture of her, my great-grandmother Lena, and her 9 surviving children out of 11, standing there in front of the house that my father grew up in. So eventually my grandfather Martin, who was the youngest of the 9 surviving children, got the home farm, and my great-grandparents moved to town. She's standing on a very lonely Nebraska prairie, like there's not a tree in sight by the time I still remember the house. It's been torn down, and my aunt and uncle built a different house that sits on the place, but just this woman sitting there with her 9 children, and they worked hard. And so, what was the story of their life? Well, they were able to leave most of their children with a quarter section of land. And so when they first moved to the U.S. in the 1880s, things were pretty bad in agriculture. Granted, put the U.S. back on a gold standard, but most farmers had borrowed in the greenback dollars and then had to pay the damn stuff back in a harder dollar. So, commodity prices went down, and it was actually pretty bad. But they didn't get married until 1893 and essentially get their start. And so things in agriculture at least straightened themselves out. And so they were able to leave most of their children with land. Anyway, I used to, and part of my whole fascination with the power law, Cael, is that I always used to, at my past company, talk about the corn price in gold, because it would give like this historic perspective.
Yeah.
And still does. Gold is still a monetary commodity. And so this is looking at the gold cost of an acre of farmland. And I had data from Iowa State University going back to 1940. So it essentially in 1941 took 2.6 ounces of gold to buy farmland. After Nixon took us off the gold standard, that went a lot higher to almost 12 ounces of gold to buy farmland. There was a bit of a boom, but then, of course, the big crash. And in 1987, we got to our low of about 2 ounces of gold to buy an acre of farmland, although we might be getting close to that with gold as high as it is now, although land prices are pretty high. But for 2025, at least, we're at about 3.4 ounces of gold to buy an acre of farmland. Well, Gottlieb and Lena, who knows? I'd asked Dad at one point, like, how did they buy so much land to leave for their kids? So Dad's answer was, well, they worked hard, which is a family trait. And I'm like, yeah, but what else? Anyway, I've always wanted to think that maybe there was something a bit more dramatic and interesting like bootlegging, but probably not. I think they just worked hard, spent little, and saved. But they saved enough money to where they could buy. And there's also family lore about them during the wars, the world wars, that Gottlieb and his brothers had been sent, Jacob and Fred had been sent away, not to fight in, of them sending money back to their relatives in Germany. And that to me is just like, again, Gottlieb died in 1947. Lena died in 1965. And it was at her funeral that my mom and dad met. So anyway, I didn't meet them. But it's pretty cool to think about these immigrants sending money back to their relatives in the old country. Anyway, we're much sooner into the Bitcoin era, but I'm showing a chart now that's the Bitcoin cost of an acre of farmland. And I put it in a log scale just to smooth out the line just
You
a
start to
little
see
bit.
the absolute dominance that I was talking about.
Yeah. So 2013, it took 47 Bitcoin to buy an acre of farmland. 2025, it took 0.11. So essentially 11 million Satoshis to buy an acre of farmland. And that is going to continue to go down over the course of time. And so am I arguing that Bitcoin replaces farmland? Of course not. Again, we have to eat. Like we need farmland.
Yeah.
But all of these things like farmland we've used as a store of value. We've got something else to store it in. Our friend and our Bitcoin customer, Zach Smith, talks about this very eloquently in that he wants to buy more farmland eventually, and probably because of family succession issues will need to, but he doesn't want to buy it right now. And so his savings vehicle becomes Bitcoin so that he can buy a whole bunch more at a later point in time. And so, yeah, what would my great-grandparents think of all this? You know, my great-grandfather Gottlieb was born in 1864 in Germany, and he passed away in Nebraska in 1947. He must have understood, otherwise he wouldn't have been able to do it, that you save in something that holds its value, and then you use that to pass along to the next generation. And what back in those days would have been better to set your children up with than a quarter of farmland, which in the 1920s and the 1930s, as his children were coming of age and getting married, that's what he set them up with. But we were on a gold standard back at that time.
Yeah.
And so the dollars that they saved, or the gold coins, or the cash under the mattress, or the money in the bank, or whatever, it actually worked ultimately to get that done.
So that's the ask. The ask is, it's changed away from that. Now everyone is bleeding. Everyone is bleeding out in real time. and to get back to that ability, that Gottlieb had, you use Bitcoin.
Yeah, and I still think about some of this as well, and maybe I'm part of the problem as a non-farmer that wants to own more farmland. But I don't want to own it just for owning its sake. And so we'll see. But I have a nephew who's a junior in high school, the son of my brother who farms. And so a delightful part of my adult life has been to own some farmland that my brother farms, and we get to have this partnership, even though he's 8 years younger and he was 10 years old when I moved away. And he was an annoying younger brother for sure. I was probably an annoying older brother at that point. But we get to have an adult relationship that's a partnership and get to keep up. And so his son, who's a junior in high school, I don't know what he's going to want to do, but I just have thought that it would be cool that if he chooses to farm, and my kids that do not live in Nebraska, I could buy them a quarter of land that their cousin can farm to maintain that kind of connection. Now, when I look at property taxes on Nebraska farmland compared to other places, I think maybe that's not a good idea. But again, this is sort of a family legacy
Yeah,
kind of a thing. And so the generational wealth is a big deal. And it always has been for farm families. It was for my great-grandfather. It was for my grandfather. It was for my father. And it is, ultimately for us. But my dad would have been just getting started in farming in 1971 when we got off the gold standard.
wow.
He made it through the 1980s farm crisis. My brother started farming in the 1990s. I've worked in agriculture over the course of my whole career. I've always had the sense as an economist and an agriculturalist that we lost something through getting away from hard money. And so for the longest time, I had sort of the wish, why can't we get back to a gold-based money? Well, if money's a technology, which ultimately it is, part of that technology is a ledger. Gold is not the best ledger.
Yeah,
It's a good store of value, but it's kind of hard to keep a hold of. And if you have gold, there's all kinds of ways for other people to take it from you, including your very own government.
and look throughout history, how many times does that happen? It happens over and over.
Yeah, whether it's the Nazis stealing probably from my great-grandparents' relatives,
Yeah,
or during the same era, the U.S. federal government paying you for your gold, but making it illegal for you to own it any further. Or if you did, you had to be secret about it. You had to be sneaky about it. Well, Cael, thanks for taking the time to talk about the power law. Anything you think we've left out to conclude today's podcast?
I don't think so. I think everyone just needs to have it seated in their mind to be open-minded and be curious about things like this and think about how you can use these dynamics that are proved by physics law to your advantage.
Thank you, Cael.
Thank you.
See everyone back on our next BitCorn podcast.